Visa, Microsoft, and Google have just reported earnings. I have their press releases here. We're going to go through them. We're going to put a price on these stocks that we should maybe pay for them based on what we're seeing today. So Visa came out. They had a beat on top and bottom line. $2.09 versus $1.98 earnings per share. $7.99 billion versus $7.79 billion in revenue. So beat on top and bottom line. You can see that the stock price is up about 2.5% right now. And we know that Visa has been a staple here. I probably have multiple Visas in my wallet right now. And you can see right here, payment volume has increased 10%. That is pretty unbelievable. Cross-border volume, excluding intra-Europe, increased 32%. Cross-border volume total, 24%. So you're seeing these numbers that are just absolutely crushing. Net revenues in the United States went up 11%. Man, this company is unbelievable. I guess they're going to do share repurchase and dividend of $3.2 billion. Payment volumes increased. Net revenues increased. Let's continue on, see if we could find anything else in here. Oh, let's see here. Any notables? Okay, so that's basically talking about this is talking about any lawsuit that was going on. And here's what I would encourage you to do. If you've never listened to an earnings call before, go and listen to one of these three today. This is the earnings call that's going to happen at 5 p.m. Eastern time, so about an hour from now on Visa's website, investor.visa.com or whatever. I would encourage you to go and look at that. So we know that Visa is a staple in the United States and basically around the world. I see a lot of growth from this company. The question becomes, what do you want to pay for this company? Because I look at some of these things like PE and whatnot, 5-year PE of 35. It's high, but this is kind of a modish brand. Them, MasterCard, and American Express. Where else are you going to go? I know Discover's out there, and there's maybe some other credit card services out there, but those are the big ones. They are everywhere. And to me, I think I would be willing to pay a little bit of premium for this. So let's do the revenue growth. So amazing return on invested capital. That's going to drive earnings per share right off the bat. So on the revenue side, I'm going to go in here and put a couple of different numbers. I'm going to do 9. I'm going to run the gamut here. Okay, you know what? I'm going to go 8. I'm going to go 8, 11, and 14. Profit margin. Wow. Big time profit margin. Let's go 45. Let's say that something happens, that it gets cut. This is over a 10-year period. Let's do 45, 50, and 55. I do believe they can achieve 55. Free cash flow margin. I am going to go 47, 52, and 57. PE. Now, this is where the big thing becomes. What do we want to put it? Where do we want to pay for this? I'm going to go 16, 18, and 20, because if they can achieve 14% revenue over the next decade, profit margins of 55%, yes, I will reward them with that 20 PE. Could be argued as high, but I could also argue they have a high return on invested capital and they are a high moat brand. So I'm going to go there, 12, and we'll go 14. So 10, 12, and 14. Let's see what we would pay for this thing. I have it on my watch list at 180. Okay. So basically 144 to 150 on the low end, 236 to 245 on the high end, 186 to 194 in the middle. That's probably why I have it at 180. I could probably increase this number, to be honest with you. And if you think that they can do 14% revenue growth with 55% profit margins, 57% free cash flow margin, you are going to get a 14% return. Now let's lower this. Let's lower all of these to 10 and just see real quick, because this is one of the most interesting companies out of the three for me. Okay, so 220 to 330. That's probably the number. I don't know, guys. This is a very interesting one. If it was me, which I am me, I'm going to do more research onto this thing. All right, let's go to Google next. Google announces quarterly results. Let's see what their stock price is doing. That's Microsoft. It is up 4% right now. So Google beat $1.17 versus $1.06, $58 billion versus $56.9 billion, and they announced a $70 billion share buyback program. Do I love it? What else are they going to do with their money at this point? It's not completely overvalued. I mean, I look at this and say the 5-year PE is sitting at 28. The current PE is sitting at 22.5. They don't pay a dividend. I mean, I'm not completely shook up about it. Let's see what they did here. So Sundar Pichai has been out there and talking about AI. AI has been the big thing, and he's actually one of the ones warning about kind of the quote-unquote dangers of AI, which I was very surprised about. But Google's going to get into that world big time. Let's see here. What did they do? Revenues came in increasing 3% year over year compared to the previous quarter. Net income. Let's see here. Anything special? Let's go to the YouTube side. So YouTube ads did increase from the first quarter of 2022 when you compare the two. Google's cloud absolutely crushed, doing 7.4 billion versus 5.8 billion. Google's services in total 61.9 billion versus 61.4 billion. All right. Let's see here. Stock repurchases. This is what I wanted to see. Stock repurchase. The board of directors has authorized a repurchase program of $70 billion of Class A and Class C shares. Is there a timeline on this? All right. I do not see a timeline here. They will probably talk about this unless I'm not reading deep enough, they're going to talk about this on their live cast that's going to happen at 5 p.m. So I would encourage you to go watch that one, or Visa. You don't need to watch them all, but just to see what they talk about. But this one's probably a little bit more interesting because they're doing this share buyback and the market seems to be reacting positively about it, almost up 5% at this point. So let's go here to Google and run a stock analyzer. Again, really good return on invested capital, which I like to see out of a company. It drives earnings. It drives earnings for the company. So from a revenue side, now, before I do this, you're probably looking at these revenue growth numbers over the past 5 and 10 years and saying, oh, they did 20%. Well, I wasn't planning on doing this, but look at this jump that happened. 136 billion, 161 billion, 182 billion, and all of a sudden, 260 billion, 282 billion. That's from COVID. That's not super sustainable. But to me, you need to tailor that back a little bit. But guys, before I do Stock Analyzer, I want you to subscribe to the channel, and I invite you to come and join our software. Everything that I'm doing right here is all included in our software. You're going to get Stock Analyzer tool. It's one of the most important and used pieces of our software. 1.3 million times used in 2022. It's awesome. I use it every day. Take a screenshot of it, send it to friends. Risk-free. Come and join. So let's run through here real quick. Revenue growth. Let's do 8. You know what? I'm going to go less. I'm going to go 7, 9, and 11. I'm going to go 7, 9, and 11. And the reason is I'm looking out a decade and I'm tailoring this back because they had such enormous growth through the pandemic. Profit margin, 21, 23, and 25. Free cash flow margin, I'm going to do the exact same thing. And for PE, I'm going to go 16, 18, and 20. 16, 18, and 20. I mean, they're a big moat. I'm not buying this nonsense that Bing, Google, Microsoft's Bing or DuckDuckGo or anything like that is going to come and take out Google. Let's see what we have here. I mean, here's your numbers. $95 to $131 with a middle ground of $112. It's on my watch list at $95. And basically, if you think, this low end, I really beat this thing down. 7% revenue growth. I don't think that they're going to do 7% revenue growth. I think they're going to do more than that over the decade with a very low profit margin, which I think they can eclipse. PE of 16 and a return of 10%, and you're getting $95. This is a very interesting one. It's much more interesting than Visa right now, that's for sure. All right, let's go look at the last one, Microsoft. So Microsoft is also up about 4.2%. $2.45 earnings per share versus $2.22. That's a beat on the top side. 52.9 versus 51 billion on the revenue end. That's a beat top and bottom line. Let's see what they did. Revenue was up 10%. Okay, up 7%. I don't know why I said 10. Operating income was 22.4 billion, increased 10%. Net income increased 9%. Earnings per share up 10%. Wow. Now, this company is heavily involved in ChatGPT. This is one of the big high flyers of this year, really, stocks. Commercial products and cloud services increased 13%. Office consumer products and cloud services revenue increased 1%. LinkedIn increased 8%. Dynamic products and cloud services increased 17%. So they're basically seeing increases all over. Windows OEM revenue decreased 28%. Device services revenue decreased 30%. Doesn't seem like people really care about that. Xbox content increased 3%. I mean, for me, and what was that? I just saw something. Microsoft returned $9.7 billion to shareholders in the form of share repurchases in the third quarter of fiscal year 2023. I don't like that personally. When I see a company like Microsoft that has a 5-year PE of near 40 and a current PE of about 33.5, I don't like that. I think that's a stupid decision. But again, this is another company where when we look at the revenue growth, 134 to 153 to 184 to 204, I have to figure out a way to take this back because that people were staying home, people were getting new computers, PC market was going crazy. I just don't think that type of growth is sustainable. Will they have growth? Absolutely, they'll have growth, but I don't think that type of growth is sustainable. All right, I'm going to go with 4, 6, and 8. Profit margin of 27, 30. Let's go 28, 31, and 34. Free cash flow margin, I'm going to do you know what? The free cash flow has been extremely consistent. I'm going to go 29, 30, and 31. PE, 16, 18, and 20. 16, 18, 20. Great return on invested capital. Great moat. 10, 12, and 14 for my return. And I'm sitting somewhere between $130 to $175, middle ground of $150. Watch list price is 200, and based on that PE, yeah, I pretty much want it to fall in half. Fall in half is about 150, so that's kind of where I'm sitting here. Guys, I invite you to subscribe, see more videos like this. Tomorrow we're going to be doing more reaction videos in the evening. I believe we have Amazon tomorrow. No, Meta is tomorrow. Meta's tomorrow, Amazon is Thursday, and then next week we have some more companies, including Apple. So subscribe, stick around, instant earnings reactions videos. You guys have a great day.